If you don't understand how to short the markets, you're never going to get rich. There are pro traders out there every day who are manipulating people like you, taking advantage of your greed. While you are thinking things are going to continuously go up, they are simultaneously going short, getting ready for the market to dump. Now, just for an example, last week I made $60,000 going long on Bitcoin, and then this week I flipped around and got short and made $50,000 as things went down. This is the double-edged sword of trading that only the pros understand, and that's how they're making millions of dollars every year, no matter what the market is doing. So if you want to learn how to double your trading income and use this double-edged sword strategy, hit that like button and keep watching. Now listen guys, I started trading in 2005, blew up like 3 trading accounts. It was a disaster. But then I finally started getting the hang of things, and in 2007, the market was ripping. We were in a full-blown bull market. I was crushing it, making money. All of a sudden in 2008, here comes the financial crisis, and there was a complete meltdown. I got absolutely wiped out. Why? Because I didn't understand the concept of what goes up must come down, and this was the bear market slapping me in the face, blowing up my account. And then I saw that there were pro traders out there like Michael Burry who made hundreds of millions of dollars as things went down, taking advantage of everyone's greed and then manipulating fear as the markets come crashing down. You can actually make money. Now, another example, 2021, I made $1.7 million in the bull market, and in 2022, I made $500,000 as the market got completely destroyed and everyone got their accounts wiped out. This is why you must understand how to short the market, guys. If you don't understand this concept, I tell you what, you're not going to get rich trading. And yes, you might make money in a bull market when it does happen, but you're going to give back so much of those profits. I didn't give back my gains in the bear market. I made a shitload of money in the bull market and then called the top on Bitcoin at 60K and then absolutely crushed it as things went down. So in this video today, I'm going to give you my 5-step process on exactly how to identify when a good shorting opportunity is arising so you can identify it and take advantage of it. And right after that, I'm going to show you exactly how I use this 5-step process to make $50,000 on Bitcoin and Ethereum going short this week alone. Also, guys, I do in fact have a shorting course called Decrypt On. It's about 7 hours long, teaching you my entire strategy, and I would love to give away one course to one lucky winner. All you got to do is hit that like button, subscribe, and make a comment in the section below. All right, guys, so let's get right into the 5-step process. We're going to learn exactly how to short the markets. Now, first of all, we need to find a parabolic chart. All this basically means is that we need to find a chart where we saw an asset making a dramatic increase in price in a very rapid and short amount of time. Down here, trying to predict that that was just about to happen, right? When price action is in this little box down here prior to making this move, we have zero fucking idea what's going to happen. We have no idea that this is about to come. Yes, we can trade breakouts, but we don't know if that breakout is just going to make a little mini move to the upside and then crash after that, or actually make that monumental move to the upside. But once we identify that monumental move after it has already happened, we know with 100% certainty there is going to be a massive crash and meltdown after that. This is just simple supply and demand. You can only have so many buyers on the way up where they finally run out of buying pressure. And then all of a sudden, once there's a little kink in the armor, it causes a panic and fear once that first support level is broken. And then we see the big collapse to the downside. This repeats itself 100% of the time. So basically, we're just looking for parabolic charts. So in step 2, guys, now that we have witnessed and identified a parabolic chart, we now look to find areas of resistance where that parabolic chart might have reached its top. Now, for in this instance, in this case, we can look at this chart and say, okay, there was a valley here with a low, another valley here with a low, and then another valley here with a low. Now this is what we call an area of what was support before price broke down, and now it is resistance now that price is below it. After that, we see we have identified a parabolic chart right into that resistance level. So now somewhere in this area is a high probability that this thing is going to run out of steam and momentum and then see a nice crack to the downside that we can actually short, take advantage of, and make some money on the downside. Step 3, guys, is always prepare for a bull trap. A bull trap is simply when a resistance level is broken to the upside and everyone gets faked out and says, oh my God, we're going to new highs, all-time highs, here we fucking go. But shortly after it breaks out to the upside, it fails to the downside, and the biggest moves in the market always come from failed moves. So every time you're shorting into a resistance, look for a breakout above that resistance first, and then a failed breakout, and that's what creates the panic to the downside. And then all of a sudden we see a massive amount of selling pressure to the downside. And then typically there's always one more peak just above that resistance, and that is a lot of times where price is going to top out. And then you want to place your stop somewhere above that because you want to prepare for a spike above that level, fake everyone out, because a lot of people place their stops just above that high resistance. then you always see a massive spike to the upside. And a lot of times that's just stops being taken out or people getting stop hunted. And then the pros are actually entering short the entire way up here and getting ready for that potential collapse to the downside. You don't want to be a sheep. Sheep get stopped out on bull traps where the wolves add on bull traps. I'm a wolf, and that's what I teach people how to become, is make that transition from sheep over here to wolf, because this is 98% of the failing traders out there. The wolves are the 2%. We're trying to become the 2% of top traders out there. So that's step 3, guys. Always prepare for a bull trap, which is basically a spike above that resistance that you're watching. Everyone's going to get stomped out, and that's where you need to be adding to your position. Step 4, guys, is setting up a grid range for entry, potentially just 2 orders, potentially upwards of 20 orders. Now, I never try to pinpoint an exact entry or exit because I'm not a fucking psychic. Things get super volatile and super unpredictable when markets get up at a peak level and everybody's talking about this is going to the fucking moon. When it's not, it's getting ready to collapse, but we don't know exactly when it is. So we have to pick a wide range of smaller positions to dollar cost average into that position. So say for this example, we see a parabolic chart into a peak resistance level that we have identified on the chart. Then there's also maybe another pivot somewhere just above it, of which we don't want our stop above that. We don't want our stop above these pivots. We need our stop somewhere above that level to give it some breathing room to actually get in and not get stopped out when this thing actually does get super volatile at this level. But we do need to have a stop in place, because what if this thing just gets fucking skyrockets, sees a huge short squeeze? This is very possible. This is why shorting is also very difficult, because things get volatile and sometimes short squeezes go much, much higher than we can anticipate. And if a resistance level is broken, that means that, potentially there's this mass hysteria and people continually buying, or people continually trying to short and then getting stopped out. And this creates what we call a short squeeze to the upside. So for me, what I like to do is set up an area of a grid where I'm potentially going to go short. First of all, we don't know if price is even going to make a bull trap. So sometimes I start adding below the actual resistance point, because sometimes there's FOMO and we don't want to miss out. The thing is, you don't want to go big and heavy here. You want to have a wide range from here all the way up through here, right? So you could have potentially 20 orders in this box. Every order, every step of the way, you want to continually add to this position in that range, and then have your stop pretty high above the resistance level, because you don't want to get stopped out and stop hunted on the potential bull trap that likely is going to happen. The next step of this process, guys, is don't lose more than 2% of your account if you do get stopped out. Like I said, you need to have a lot of wiggle room. So say your grid entry range was somewhere in this box, which then if all your orders got filled, you would maybe have an average entry right around here. Now, if your stop did get triggered at this level up here, you can't lose more than 2% of your account. So how would you calculate how to only lose 2% of your account if you did get stopped out? We can use this example over here. So say you had a $100,000 account, which a lot of you guys probably don't, but if you don't, there's going to be hydro funding. Talk about it in a little bit. Say if you had a $100,000 account balanced, let's use Bitcoin for this example. Say your average entry was at $30,000. Your stop loss was at 31,500, which means you are willing to lose 1,500 points on this trade. Your target was 25,000. So you're willing to make 5,000 points on this trade, which means your risk reward ratio would be 3-to-1, of which we always want at least a 2-to-1, meaning your profit potential is at least double than the loss potential on this trade. How much position size can I take if I can only lose 2% of my $100,000 balance if I lose on this trade? So 2% of $100,000 is $2,000. We need to figure out what our position side is next. We take our stop loss price from our entry price, which is our $1,500 point loss if we do it. Now to find the actual position size, we take our risk per coin, which is $1,500, divided by the max dollar loss, which is $2,000. So that's $1,500 divided by 2,000. That means we can short in total 1.33 Bitcoin. That is our max size. So with an average entry of $30,000, we can only trade a max size of 1.33 Bitcoin. We can only lose 2% of our accounts. How would that work? You would take 1.33, say you want to do a grid order of 10 orders. That means you would set 10 orders of 0.0133 in a range here. So 0.0133, 0.0133, 0.0133, 0.0133, and so on all the way up here. So your average entry would be around here. Then if the stop did get triggered, you would only lose 2%, and that's how you do it. Obviously, that's really confusing to do. So I'm actually building an app, guys, that I've been developing here, and it's coming out soon. But just for an example, all you would have to do is is say, okay, I only want to lose 2% of my account and I want to get in a grid between 4,000 and 42.62, and I want to set my stop up here, and I only want to lose 2% if all those orders are filled. And I also want to take my profits in a grid of 5 orders as well between here and here. All you do is this basically set that in the actual app, and it would calculate all of this for you. So you would get short in this actual range here, and it would actually exponentially grow your position as it got higher into the risk. So you would actually have a higher average position, say up here. And if you did get stopped out, you would only lose 2%, and it would automatically enable you to set profit targets in a grid as well. So you would constantly be taking profits on the way down. This is a game changer. So I can't wait to get this out to you guys. It's coming soon. So the final step to this process, guys, is setting our profit target range, obviously with that minimum 2-to-1 risk reward ratio. And how we're going to do that is look for major support levels and minor support levels, as well as the 38 to 61% Fibonacci retracement, and set up just as we had a grid for entry, we need to have a grid for exit between, whatever you want to do, 2 to 20 orders. So as you saw here, maybe my average entry price was here. We had that grid range to get in on this trade between that range. And now let's see what kind of levels we can look. We can see there's a pivot here. There's also a pivot going across here, also a pivot here. Now we have minor support as well as major support all the way down here. So this would be our final profit target. We have zero idea what's going to happen. For me, I like to ensure that I'm always making money just in case it is only going to pull back to a minor support level and then rip to the upside. So I'm going to set a grid of taking profits every step of the way down, and I'm going to have my final profit target at the major support level. And this just makes it easier to always be making money in the markets. How many times do you see profits in your account disappear so quickly because you never lock in any gains? That's why I never pick one entry and one exit. I'm always getting in and out in a grid because it ensures that I'm making money every step of the way. Step 5, guys, is the most important thing. This ensures that we don't lose money, is always move your stop loss into profits or break even when the trade starts going your way so you never lose. Now, for this example, say our average entry price is right around here, but at the time of entry, our stop loss level is up here. But as the price starts moving down into profits for us, we can't just leave our stop loss up there, guys. So we have to continually move our stop loss down with the price action going down to ensure that if price does actually come back up, and say we go into profits for a brief little bit right here, if we left our stop loss up there, this trade could potentially turn into a loss, which is not what we want to do. We're trying as hard as we can to never lose money. So it's so important that you consistently move your stop loss down to ensure gains as you're making money in the grid as it moves into profits, as well as the open positions left that are remaining, you don't give back all those gains if that does occur. Sometimes this does get a little crazy. Now, just you'll see in the live trade example right after this, I was up $70,000 on Bitcoin Ethereum. I locked in about $26,000 in profits, and then boom, Bitcoin ripped. Now I had $30,000 wiped out instantly and stopped me out for break even before it came and collapsed right back down. Let's take a look at this live trade example. Locked in guaranteed $40,000 in profits using this exact 5-step process from start to finish as I recorded the whole thing as it played out right now. Currently short Ethereum. Let's take a look at the chart as we peaked right into this level of about 2023, ripping over these highs. We also have another pivot. If we pull back here all the way up at about 2165 after that big sell-off, pulled back up, retested, and then continued to drop in the trend. You can see that also can extend all the way back here to that low pivot here at about 2162. A breakout above that level would definitely be bullish for Bitcoin, more so a breakout and hold above that level. Breakout is much different than just a spike and a wick through and then a failure, which then creates a bull trap, of which I love trading bull traps. It's typically the biggest reversal signals when you break out over a level and then fail to hold above that level. We call that a bull trap, and that's typically a lot of times the most significant reversals. Similar that you saw here, once Ethereum broke down these lows, a lot of times people, oh, this is it, we're going much lower here, but that actually turned into a bear trap. As soon as that closed back above that level, that was a potentially confirmed bear trap, and then we just was off to the races. If we look at the daily chart, what are the indicators that are signifying that this is a potential area to be shorting? One, we see another retest of these previous highs on degenerate shift. We just got a sell signal on degenerate shift. We're extremely greedy on the daily chart. Profit targets that we need to look at here here can be based on multiple factors. One thing that we can look at is the Fibonacci retracement after this push. Now, typically a lot of times on a pullback, you'll see a push back to about 38 to 61%. So we can draw the lines here. We obviously have this pivot here on Ethereum at about 1780. We obviously have this pivot here about 1670, which also is in confluence with the highs that are around here. And then also the pivots here of the closing prices from this consolidation before the breakout is about 1800, which also is around these levels here. You can see it actually, if you drag it all the way across, you can see more confluences in the chart. That low here, this high here, and then this consolidation that happened right here before the actual breakout where we got long and rode this thing up to the upside. And that's how we were able to make money on the long side. But now we are in the areas of potentially getting into the overbought area to short into. Now, obviously, I started shorting below 2000 and I continually added on the way up. And now my stop is going to be somewhere if we start breaking above and holding above this level. Now, my entry is not the best if we look at Ethereum right now. Average entry is about in 1995, so a little bit below the actual highs. This extended farther and faster than I wanted to, but I added this entire move up, of which my areas of getting out are between about 1944 as well as all the way down to 1714. I'm basically, looking for a potential pullback and retest of the actual trend, because we look at the Jenner trend right now. It's still in a very bullish trend. It hasn't had any sign of reversal yet. But if we start breaking back down below, the lows of the Jenner trend was about 1940. Also, the pivot highs from these two spikes, that would be an indication of, okay, we are going to see a trend reversal, and this thing could pull back all the way down to my lower target of about 1680. So I'll be locking in gains essentially in this box, which is also in conjunction with 38% to 61% pullback on the Fibonacci. So that's the game plan right now for Ethereum. As we play this out, let's take a look at the Bitcoin chart. Brief interruption here, guys. Did you know that 75% of traders have accounts under $25,000? This creates a huge problem because even if you double that account in a year, which is almost impossible, you're still only making $25,000. Introducing Hydra funding, where you can potentially get access up to $500,000 in capital. All you have to do, guys, is sign up for a challenge account, which is going to give you potentially access up to $500,000. And if you earn a 10% profit in this demo account without going into a 5% loss overall or a 4% loss in a day, you will then pass their evaluation phase and, yes, get access to an account with the selected size account. And now, instead of trying to double a $10,000 account, you could potentially earn only 10% on a $100,000 account to earn the same level of profits. And the benefits of this are huge. Rather than risking your entire $10,000 on one account, you can use just $1,000 to potentially get access to $100,000 in capital. You can trade crypto, Forex, stocks, CFTs, gold, oil, everything under the sun, all on MT4 and MT5. If you're interested, if you have an account under $25,000, like 75% of traders out there, you're not going to make any money with that account because it's too small. Get access to pro-level funding and pro-level capital with Hydra funding. Link's going to be below. As this is pulling back much better, more significantly as of right now, but we saw that massive run right into the previous lows that were about 29,300, 29,500, and then we also have this pivot here with a high about 32,360. So really for me, my big short range was anywhere basically between this box. That would be the most significant area to be getting short, right? We have the pivot low here, the high here, the high here, and that's all about 25,000, of which if we look at the Fibonacci retracement, 31% is about 26.8, and also the 61% is about 23.8. So that's kind of like the high probability of a pullback. The dip buying potential opportunity again would be also in 38 to about 61%. This will also be a potential dip buying area for a potential spike to the upside for Bitcoin, and especially to lock in our gains. We're super greedy on the fear and greed index. We just got a sell signal on degenerate shift. There's a lot of sell signals here for Bitcoin on the near term where I think we could see a nice pullback to the downside. See my average entry, 30,197, and I'll be locking in gains all the way down to previous big support area around 25K, which I have the lowest exit about 24,861. But, there's a lot of consolidation here. It could potentially retest this trend right here and then just rip to the upside, of which I'll continually adding to my short on Bitcoin, and then my stops all the way up if we start breaking out and closing above these previous pivot level highs. But I do think we have a high probability of coming back down all into this support area, of which I'll be locking in gains. This is the short setup. I think we're going to come all the way back into these ranges, but if we continue to push higher, I'll add to my positions. But that's the current update right now, guys. I'm currently up 15K on Bitcoin. I'm down 10K on Ethereum, of which I still think Ethereum can pull back into these levels, right? We're really right at the beginning of the potential pivot and reversal of this near-term trend. So let's continue tracking this trade and see how it plays out. Ethereum up pushing 70K plus on this short trade right now. I'm still looking for one last dip to the downside to start locking in those gains. Now, all right, guys, so a few days have just passed and some crazy stuff just happened. Now, what we need to know right now is that I've made $40,000. I've already locked in as the price dipped into my grid. All these closed shorts here on Bitcoin right now, all the way down until I close my $60,000 profit long. This is $26,000 in closed profits. You can see I'm also locked in 13,000 on the Ethereum dip. So guaranteed I'm making 40K no matter what. And in fact, I did get stopped out. I gave back $30,000 in profits in about an hour. If we look at freaking Bitcoin, I was out for my buddy's birthday at dinner. And if we look at just the 15-minute chart, what happened here on Bitcoin, a huge volatility on Bitcoin all of a sudden out of nowhere, which stopped me out and basically gave back 30K in open profits on that position. And then I ended up getting short again at about 29.3 and also about 28.7 for a much smaller position because I did believe that that was a potential fake up. But just look at that single day candle. So I had to protect myself because I wasn't monitoring. I was out at dinner and that literally happened within a few hours while I was at dinner. And I came back to check and I was like, fuck, shit, god damn it. But you can see again right here, this was another bull trap faking everyone out. And now we're coming back down to the downside. So what we're looking at right now, guys, is I did get back in short of a small position of which I'm up about $3,800 on. But more importantly, I've already locked in my profits again on the grid because I don't know how far down it's going to actually pull back. But right now it just pulled into a minor support level, not the major support level at 25K. And does it just consolidate here and continue break down? We don't know. What if it just rips to the upside? And then if I never locked in those profits on the grid at minor support levels before it actually went to a major support level, we don't know what's going to happen. That's why I love to lock in gains. That's why I've locked in $40,000 guaranteed no matter what happens from here. I either make $40,000 or I make $50,000 to $60,000 if we do get the dip down to the major support levels. So looking at Ethereum, same situation here, but I did not get stopped out. You could see I almost did, barely even got close to my break even to close in small profits there. So thankfully I did not get stopped out of that position and I still have my stop up there. And I'm looking for one last dip to break down into these lows into the major support level for Ethereum, of which I'll be continually locking in the gain. So I still have $5,700 in open profits. This will probably turn into $10,000 profits. So that's basically the 5-step process for shorting, guys, played out right here live in front of you with an actual trade from start to finish. But anyways, guys, that's a wrap for today. I have 2 other videos that are really going to be useful to you. One, you can go watch the video that was previous to this of me making $60,000 on the long side. So you learn more about the long strategy for that. But also I have another video that shows me turning $20,000 into $1.7 million using long strategies right up into the bear market at 60K. You'll watch me turn 20K into 1.7 million. There'll be links to both those videos right here. Anyways, like, comment, subscribe, and I'll see you guys in the next one.